So I am super excited because we made it through the entire first quarter of 2023 and the real estate market is still here. We're still going pretty strongly actually because I know for my buyers that are active in the market now, there's pretty stiff competition for them. And all of my last few listings that I've gotten sold since probably about the middle of January have gone under contract for list price and above. So I'm excited because we're back to a very strong early spring market here with all positive indicators with the frenzy of the days of old well behind us, but things are back to more of a steady state and we're still in a very healthy seller's market, as I will show you here. So let's go ahead and dive in and look at the greater Dallas market as it pertains to the end of March, that is the end of the first quarter in 2023. So I always like to start with month supply, which is the best indicator of supply and demand. It tells us how much inventory is on the market at this point in time getting absorbed and whether or not we're in a seller's market versus a buyer's market. We'll see that by the end of March, we're looking at 1.8 months supply on the Dallas County side, which is up 100% year over year, especially from the heights of the market last year, where you can see that month supply was at about zero point 0.5 months for Collin County, and then probably about zero point 0.7, zero point 0.8 months for Dallas County there. So for Collin County today, we're at 1.7 months supply. These are great indicators for sellers anyway, because it's showing us that we are still in a very strong seller's market overall, and that you can see from the activity between March and really November how stark the difference is in terms of the market rebounding, buyers getting back off the fence and jumping back into the market. Whereas as of November, even October, November, we were seeing above 2.5% going on 3%, right, in terms of month supply. And now we are well below that, showing that the demand has rebounded, that buyers have come off the fence, but also that we haven't seen a glut of inventory reach the market either. So you can see that the market has shifted back to being in the favor of sellers as sellers continue to hold on to their homes at a more reasonable rate, and they're not essentially motivated to sell in any particular way right now based on the amount of equity that sellers are holding in their homes, as well as the fact that many homeowners have very low interest rates compared to what they can get on the market today, which is also keeping a lot of sellers parked, which I'm finding in real time in my conversations with homeowners. Overall, when we look at median prices are still quite strong. And you can see the equity gains for homeowners these days over the past 5 years. Now, what's really interesting, and you'll continue to see this play out, are the differences and distinctions between Dallas County and Collin County overall, where you can really start to see, even in the price growth trajectory here, a lot more of that demand picking up really post-COVID in that particular area, Collin County, that is, in contrast to Dallas County. But you can see in Collin County in general that because of all this kind of newer demand post-pandemic, that the price growth trajectory has been a little bit more aggressive in that part of the Dallas Metroplex. Whereas we see more of a, steady kind of flatter linear curve there for Dallas prices, albeit still quite strong. Now, what we are seeing year over year is that prices have declined in terms of the median prices between both Collin County and Dallas counties. 7% for Collin County, we're down year over year. 5.2% were down year over year for Dallas County. But you can see overall that over time, we're seeing a pretty steady and constant price growth trajectory and linear progression there. But when we take a deeper dive at median prices for homes priced about that median level, we see quite a different picture. We'll see in Collin County that really, when we look at prices year over year, that they're a lot more flat in that price range, and we're seeing fewer declines. So you'll see that we're only down 0.8% year over year in that price band, from between $299,000 up to $424,999. And on the Dallas side, we're also seeing more moderated price declines year over year to just negative 2.2%. And we see a completely different trajectory when we look at the new construction prices. But we know that new construction has largely been influenced by the factors that drive inflation, right? Increased supply costs on their side now being passed through and borne by the consumer. So we are still continuing to see increases in the price of newly constructed homes. In Collin County, we're seeing that increase by just the 1.4%, but on the Dallas side, it's quite a bit more stark, whereby we're seeing increases of 6.4% at the median level. So the number of closed sales is another area of stark contrast between Collin County and Dallas County. We see that demand for housing in Collin County remains strong, whereby closed sales are up 5.4% year over year, indicating that buyers are still motivated. They are out here trying to get in homes in Collin County, and they are ready, willing, and able to close. Now, on the Dallas side, it's a little bit different because we're seeing that closed sales are down 18.2%, indicating that the higher interest rates might be having a little bit more of an impact on Dallas County versus Collin County. Another good indicator of demand is the number of showings per listing. That means the number of buyer tours that are being set up over the life of a listing before it goes under contract or closes, essentially. And this is a great indicator of demand because this shows us how buyers are essentially responding in this market and where they are year over year. In Dallas County, we're seeing only 9.7 or about 10 showings on a house per listing before it gets closed. And in Collin County, we're up to about 11 there. So not stark differences between the two, but you'll see that, between the two, we're at about a loss of about 50% of buyer showing traffic for every listing. So I think this is a good indicator showing that really with the higher interest rate environment, we've lost about 50% of the buyers out there year over year. But this is still favorable for Collin County because the buyers that are out there are still quite serious. And as we said, they are ready, willing, and able to close. Now, this could also underscore in our last indicator, essentially the fact that, buyers in Dallas County might be a little bit more impacted by interest rates and affordability when it comes to the home purchase, maybe more so than Collin County, showing that there might be a little bit more price elasticity between the two markets as well. Now, when it comes down to it, the greater Dallas real estate market is still going quite strong. We have very solid fundamentals, especially on the side in favor of sellers, whereby it is still a very strong sellers market, with the entire market for inventory turning over in fewer than 2 months. Additionally, we're seeing that the number of closed sales is up in Collin County. It's down in Dallas County possibly being impacted by the higher interest rates in terms of the affordability equation for buyers, a little bit more than Collin County. New construction and prices in new construction are still quite favorable for builders in that sense that we are still seeing prices going up a little bit. Now, when it comes to resale homes, we are seeing that we are starting to experience price declines. The strongest price band, though, where we're seeing fewer price declines, is going to be hovering about the median price level. That is between $300,000 to about $425,000. If you have any questions about anything else going on in the market related to residential real estate or commercial real estate, don't hesitate to reach out to me. I'm always here and I'm in your corner. Have a great rest of your day.